See anything? Hi, everyone. I'm Caroline Zakarian. I work for the Office of Civics and Community Services here at the Los Angeles Public Library. Welcome to today's program on more from the Vita program and how to file taxes online. This program is a series of programs that we have on supporting financial literacy and is brought to you today by CSULA and CSUN VITA and LAPL. Professor John Cooper from CSULA and Darlena Tran from CSUN will be talking to you today about the ins and outs of how to file taxes online and how they are conducting tax services during the pandemic. Please keep your questions coming throughout the program, and there's going to be a short question and answer period at the very end, so I'll come back at the very end. Take it away, Professor Cooper and Darlena. Thank you.
Hi, thank you for having us. We were here a few weeks ago, and I guess there were enough questions that we were asked to come back and see if we could answer a few more. So we're going to do a short presentation, and then following that, we're looking for your questions. So as we were just introduced, Darlena Tran from Northridge, and I'm John Cooper from Cal State Los Angeles. And the VITA program's really pretty amazing program. Free sounds good, right? So free tax preparation, that's what we're talking about here. We have volunteers that are student volunteers for preparing returns, and they're all certified, and the work is done for free. Everything is reviewed. So this is something you may be interested in. So VITA is an acronym for Volunteer Income Tax Assistance Program. And like I just said, it offers free tax preparation services, generally for those that make less than $57,000. But if you make more than that on the return, be sure and contact one of the sites, because we do go over that. It's just most of the returns we do are the $57,000 and less. We also prepare returns for persons with disabilities and limited English-speaking taxpayers. My last count at Cal State Los Angeles, we had 11 different languages that we could handle there. So you'll find the same at CSUN. So don't let that stop you. So it is a partnership with the Internal Revenue Service. They actually fund our work, and it's a great benefit for the students who learn about how to do taxes, and for you as well. And like I said, everything is completely quality reviewed. So all returns are prepared by trained and IRS certified volunteers. So they go through a pretty extensive training process. We actually started at Cal State Los Angeles in September of last year and trained every Saturday to prepare tax returns. The experienced volunteers, ones that have participated in more than 1 year, are doing quality reviews. So they review someone else's preparation work. And then there's actually another level. We have managers that are working in public accounting and out in practice, and they actually do the last review. So we really want to make sure we get everything right. The federal and state California returns are electronically filed after you review them and approve them for e-filing. So there's nothing that happens without your approval. So Darlene's going to tell us a little more here. Darlene?
Yes, about the VITA program. So with the CSUN VITA program, like if I think the volunteers, they have to go through rigorous training of like how to do the tax preparation right. And again, we encourage everyone to let's file the tax. And if you live somewhere near CSUN, or if you don't know, especially for CSUN this year, everything will be virtual. You go onto the CSUN website and just search for VITA, VITA program, and it will show up. And there is a button where you just click make an appointment. And so just make an appointment, and there will be prompts to help you to the steps to what to do next. Mhm.
And let me fix something here. I just was told that I didn't start the slide deck properly, so let me restart it. Technical difficulty here, but we'll get this together. So back to this, and we'll try one more time. Make sure it works properly. And from current slides, so, all right, Darlena, do you need this slide or the next one?
Let's see.
What tax returns are in scope? I think you were on this one, right?
Yes. So actually, you want to talk about this, the one in scope, and then I will explain the credit later.
Okay. Yeah. So ready for the next slide then? Okay. There we go. So do you have to file a tax return is a common question. Not everyone needs to file, but you'll find out in a minute that there are often many reasons that you should file. But these are the minimum requirements to file, I guess is the way that I would put it.
And then actually, what do you have to file? I have a list right here of well, first, if you do have to file or not, let's look back into what is the standard deduction. I think that's the question that we need to ask. And the standard deduction is usually every year the IRS release the amount of the standard deduction, and it usually is about the same amount. For this year, the standard deductions for single is 12,400. For married and foreign joint, it's 24,800, and for married and foreign separately, it's the same amount as single. It's 12,400, and for the head of household, it's 18,650. And if you also get additional of $1,300 if you are age 65 older or blind. So if your income is higher than these standard deduction, then you do have to file. But if it's lower than the standard deduction, you don't have to file, but we encourage everyone to file. Just because you might have probably withheld some taxes and you file to get some refund, or you qualify for other credits that the government have to assist with the low income families. So just that, I mean, it's beneficial to file anyways. And also it's a one way to prevent tax identity, to prevent theft and scam for that stealing your information to get a refund or use your information to file the tax for other purposes. So if you file your tax, that's when your records is already with the IRS and you file early. So when they use your information, they will be rejected. And let me see. And even let's say, can you go to the next slide, John?
Next slide, please. I'm not doing it.
Okay. So with the most of the families, they qualify for the earned income credits, and especially for student, you have education credit. We're talking about a little bit about the earned income credits later, and the American Opportunity Credit later in the next slide. Can you go to the next slide? Yes, there you go. So the earned income tax credit is to help low to moderate income taxpayer get a tax break. And if you qualify, you can use the credit to reduce the taxes you owe, and it may increase your refund. And to qualify, the amount of income you earn must be less than $56,804, or just generally it's $56,000, and you receive up to $6,660. So the amount depending on your filing status, whether you're single or married, whether you have no children or the number of children you have, but the maximum that you can claim for the credits is 3 children. So if you have more than 3 children, it would still count as 3 children, and the amount you earn. So I just want to put a note in here that you won't be qualified for the earned income tax credit if you are married and filed separately. So if your earned income was higher in 2000, there's a new the CARE Act that came out for the earned income tax credit, just because a lot of people receive unemployment in 2020 and they work less. So that means your earned income is less than in 2019. So with the CARES Act that's come out, so if your earned income credit is more in 2019 that qualify you to receive more credit, then you have a choice, or then you have a choice to whether to choose the earned income in 2019 or the earned income in 20 to qualify for the higher earned income tax credit for this year. So that is one plus, where you have an option to choose in 2019 or 2020, which one is you get more refund back. Okay, and the American Opportunity Tax Credit is a credit for qualified education expenses paid for an eligible student for the first 4 years of higher education. So if you ever, so you have never earned a bachelor degree, then you qualify for the credit. And if you never claimed the credit before, and it was used to know as HOPE. If you never claimed the credit before, you also get to claim. The maximum annual credit that you can get is 2,500 per eligible students. So that means you can have more than one eligible student on a tax return. So if a family have 2 college students that qualify for American Opportunity Tax Credit, there will be the credit will be available for 2, not just 1 per tax returns. If the credit brings the amount of tax you owe to 0, you can have 40% of any remaining amount of credit up to 1,000 refunded to you. So the difference between this American Opportunity Credit different than other education credit is part of the credit is refundable, which means that you get a refund. And again, and to qualify, you must be pursuing your first 4 years of higher education, never claimed the credit before, and be enrolled at least half time of the school year. Okay. Can you go to the next slide?
Yeah.
Some special situations.
Yeah, a few. We talked earlier about. We talked earlier about the minimum requirements for filing a tax return, and I just wanted to circle back to that because those are the minimum requirements to file. But there are a lot of times there are reasons that you should file, and I just wanted to remind everyone of that. So if you had withholding on wages, and it's likely you're going to get a refund, even though you didn't earn enough to have to file, you should file. And if you made estimated tax payments, you would want to also file to get a refund. And this year is especially important to file whether you need to or not, because of the recovery rebate credit, which gets the stimulus payment to you. So if you didn't get one, it's probably because you didn't file a tax return in the last couple of years. So that's a really important reason to file, even though you don't have to. So just wanted to add that. The stimulus checks that came, we've had a lot of questions about whether those are taxable or not, and they're not. And if you didn't receive it, filing the tax return is the way to get it, because it actually will appear on your tax return. Will report that you were due a stimulus check and didn't receive it. So it'll either add to your refund or reduce the tax that's due. So it's a pretty important reason to file this year. Unemployment benefits, unfortunately, those are taxable. And that's going to be disappointing to a lot of people because it just doesn't feel right. I know you are laid off and you're getting unemployment benefits and it seems okay, but unless you elected to have taxes withheld from your unemployment benefits, you might find that you owe with your tax return this year. And then the last item on this slide, it has to do with a new benefit that's allowed for those that do not itemize deductions. So if you normally claim the standard deduction, meaning you don't keep receipts for mortgage interest and taxes paid and DMV fees, those type of things, you can still get up to $300 as a deduction, even though you claim the standard deduction, and no receipt is required. Just you need to explain to your VITA tax preparer that you made a cash contribution of at least $300 to a qualifying charity. And as long as you did that, you will get the deduction. So next slide for Darlena.
I think we went out of order, and I think we went to the virtual tax preparation like the very beginning of this slide. So let's get to the next one. Okay. So what documents that you need to get? So you need to bring the proof of ID. So it's the document that at least you need to have what is a photo ID of you and your spouse, the social security cards and birthdays of everyone on your tax return. If you are an item person, have an item assignment letter, bring it with you, because we do need the item. We do need the item letter to do the tax return, whatever that is, exactly how your name spell, how your initial is, like we need to know what it is on the item letter in order to complete your return, or else it won't get through. And if you are applying for an item at the same time doing the tax preparation, you need to have a valid passport, which means the valid is mean unexpired. So don't bring in an expired passport. We cannot use you cannot use expired documents, or a combination of two documents. One document to prove your foreign status and another document to prove your identity. Wages and earnings statements from all sources, any income that you receive, check, W-2, 1099, NEC, or miscellaneous, any kind of income that you have, you bring that in. That includes interest and dividends that you receive. And especially this year, I see a lot of people bringing in stocks. They have the 3 different stock statements bringing in. If you have stock, you win, you gain, or you lose, you still have to bring it in. And one thing that's very important for, especially for California, is the health insurance certificate. Anything to prove that you have health insurance. Before, California did not penalize you for not having insurance, but now they do. You don't have insurance, California penalize you, and also it's the federal.
All right, so
and then, the next,
I think it's, yes.
Okay.
I wanted to go back one slide, if you could, to those websites, because these are important. You know, Cal State Los Angeles, where I'm from, we are actually using remote sites for the interviews, and you bring your documents in, and there are people in these partner nonprofit organizations that will get your documents. They have screens set up, you know, the plastic shields and social distancing and everything. And that's how Cal State Los Angeles is primarily working with taxpayers. I think Northridge is primarily working through their website here, so you would want to check on that website. The Cal State Los Angeles website is a great place to get a list of our partner nonprofit organizations that we're working with. And they're all around, and I think 5 are listed there, but there's a link at the bottom of the web page that you can click on, and then there's 21 in total. So there's a lot of places to go. So a lot of choices for you. Now if we could go ahead a couple slides. And what are we on here? What doc? I think this is you, Darlena. Oh wait, Cal State. Yep, it's you. What happened to our slides? The sites are going off the page.
Actually, it's very simple with Cal State Not Reach. You go on our website, call for appointment, click that button right there on the website, make the appointment, and everything will show you what you need to do. And then it's just go to the website. Just let's go to our website and click on that button, make an appointment. It will direct you what to do, what you need to bring.
Right. Next slide. Yeah, so I don't know what happened. We've had some technical difficulties today, but we actually have 5 sites right here. But if you go to our website, you will see these. So each of these are partner nonprofit organizations, and you want to find one near where you live, because some of these are only able to help you if you live in the area. So you want to go to them and call or use the website that's listed and make an appointment. Like I said a few minutes ago, on the Cal State Los Angeles website, there's a list of the 5 with contact information, and then down at the bottom, a link to the full 21 sites. So you should be able to find some place that can get you in right away. So I think that's it. I think we're up to questions on the next slide. Sorry about the technical difficulties there. We managed to get through it though.
Okay, question time. So I actually had some questions I was already thinking about. So let's just start with the first one. So I have a daughter that was born in 2020, as we see it on the screen, and we didn't receive a stimulus check for her. And then I heard we were supposed to get a stimulus check this year. And how does that work? Does it come out of the tax refund? Is that a thing? I don't know.
Right. That's a very good question, because the only way the IRS would know that the child was born was if the child was born in 2019 and reported on the prior year tax return. So the 2020 return will be the first time the IRS knows about the daughter being born. There are some requirements on that, and one of the, unfortunately, one of the strictest requirements, or restrictive, I should say, is that the child had to be issued a social security number before July 15, 2020. So then if if your child qualifies for that, you'll get an additional $500 on your tax return. It will either increase your refund or reduce the amount you owe, but that's why you want to file a tax return.
Oh, so if I have a child that's born after July, would it be the next year? Like if it was October of 2020?
We have no guidance if it's after July 15. It may be the new act that's, the new stimulus bill that's coming out will extend this, but for right now, if the child was born and received a social security number after July 15, no stimulus check with the 2020 tax return.
Okay, good to know. I didn't know about the day. Like I heard, but I had no idea about the July 15th day. What? Yeah, go ahead, Darlene.
But it's only for, I think it's for only the first. I think it's only for the first stimulus one, not the second one. So if July, if the child born after July 15, then even has Social Security, then that child has the second one. The second is qualified for the second stimulus check, but not the first, because that was issued after the first.
Okay, that makes sense. Okay, good to know. Okay, so my husband had an unusually high as you can see, medical expenses during 2020. So a friend told me I should file separately and claim all the medical expenses on one of the turns. Is this right? Or
Well, it's not right or wrong, but we don't recommend. We don't well, it's not recommended. It depends on the situation. It's usually more beneficial to file the married filing joint. If you marry filing separately, you lose a lot of credit. So first of all, the most beneficial one is the earned income tax credit. If you marry filing separately, you don't get the earned income tax credit. And if you happen to be older than 65, you receive Social Security assistance, the SSA, you get taxed at 85%. There's no doubt if you, so usually it's a portion of it gets taxed, but you file marriage separately, you get taxed at 85%. So usually we don't encourage a taxpayer to file marriage separately.
Right, and I just want to add to that we live in a community property state, California, and the way it works here is that any income or deductions that are paid by community funds have to be reported 50-50 on each of the returns. So it really won't work anyway. So the attempt to put all the medical expenses on one return and to get a big deduction there just won't work. It's not allowed.
Sorry, my son's in the background. I apologize if you hear things from him. He's very active. Okay. So, okay, I have another general question. If you did construction and work cleanup work during the year and was paid in cash and you never received a Form 1099 for it, is that taxable?
It is. There's kind of a feeling out there that if you don't get the 1099, it's not taxable. But one of the questions our VITA people will ask you is, did you have any cash income? And the 1099 is required to be issued, I believe it's still $600 during the year. If you made at least $600, then they issue a 1099. But if you are paid $100 for construction cleanup in cash during the year, it's taxable, and you need to tell the VITA tax preparer that you earned that.
Okay. Okay. And how about, do you have anything to add, Darlene, or no? Okay. Yeah. Okay, next question. So
No,
how much
good.
Yes. How much do I need for itemized deductions to bother with keeping receipts for like DMV fees, charitable donations, all those kinds of things?
Oh, so let's go back to the other presentation slide where we're talking about standard deductions. So the standard deduction, there's a filing status for each, there's amount for each filing status. So if that the expense that incurred to you, the expenses such are your mortgage interest, your property taxes, your state tax, your charitable donations, and what else? Your medical expense is more than the standard deduction, then yes, you keep the receipts and it will be useful to file a tax return. But if it's less than that, it's always great. I always recommend clients to keep the receipts because no matter what, you might not use it, but just for safe purpose, I always do the receipt. But if the expenses are less than the standard deductions, then you don't need to be included on the itemized deduction. You will be using the standard deduction instead.
Okay.
Right. The standard deduction was doubled with the 2017 Tax Act, pretty close to doubled. And so that means it's a lot less likely that you'll have to gather your receipts for interest and medical expenses and taxes and charitable contributions. If you're single, your standard deduction is $12,400. So unless you have receipts that add up to that or more, you just take the standard deduction. Married filing joint is $24,800.
That's a lot.
So it's pretty unlikely you have to gather all these receipts up. And then head of household, $18,650. And typically that means you are either unmarried, well, we'll go with unmarried, and you have a child that lives with you, a qualifying child. So you can claim that. So those are pretty high numbers. So it's probably not worth keeping all those receipts for tax. But don't forget that $300 cash contribution that you can take even if you claim the standard deduction.
Good to know. Yeah, I used to keep my receipts, but I mean, it's
Boxes
I don't really need it
everywhere, right?
anymore. Yeah.
Yep.
Okay.
No, but
So
it's a good habit to keep the receipt. It's a good
Right.
habit to keep the receipts, and who knows, the tax law change, and then you require, and we have exemptions again and lower standard deduction again. So who knows? So it's just a good habit to keep the receipt, but whether is it used in the tax return, so it depends on if the expense is more or less than the standard deduction.
okay. So I have another general question. So if your wife's brother lives with, and he's 16 unemployed, are there any tax benefits for this?
There actually are. There are 2 tax credits for qualifying dependents. One is $2,000, and a credit means that you get dollar for dollar offset of your taxes, which is pretty amazing. The other is $500. This one sounds like it may be the $500 tax credit, but you would want to check with your Vita tax preparer to get the answer on that. But definitely worth bringing into the appointment.
Okay, good to know. Okay, so if you are single and only work for part of the year and you made just under 10,000 based on the W-2, do I need to file when it's
No, you don't have to file, and you're not required to file. But again, we encourage you to file because you might have withheld from from your job, from the W-2, and then you need to get a refund back. And then also another reason we talked earlier is to at least file so that you can have a record to keep, like, just in case if you need to buy a house in the future and they require, oh, I need to have your tax return to do for loans, or so unless you have something to show to your lender. But even you work part time, but let's say if you're age between, I think, 25 to 65, you qualify to get the earned income tax credit, and this tax credit is a lot of money and a lot of refund. So if you earn your money, get the credit. Let's see, this one is the earned income tax credit. Yes. So we encourage you to file. You don't have to file. You don't get penalized for not filing if you have that amount of income on the W-2. But again, we encourage you to file.
okay? But okay, so let's just say, your wife, my wife and I live on, it's just Social Security income. At that point, do you need to file? Like, this is like my parents. Do they need to file at that point?
Yeah, if that's your only income, you're not required to file. But we keep saying this. We really recommend you file this year because that's the way to get your stimulus payments and earned income tax credit. Social Security becomes taxable when you have other sources of income like retirement benefits or interest or wages, whatever it is. And it starts around when your income in total is around $25,000. So it's just best to file no matter what this year, because you may get that economic payment, the stimulus payment.
Sorry, you guys, the noise in the background. I'm in the kitchen. I'm so sorry. I apologize for that. Okay, next question. Yes, if you receive unemployment income for most of the year, is that taxable?
Yes, definitely. It is taxable. It's taxable at federal level. It's not to the state, but it's taxable. Yes. So always withheld your EDD. Like if you receive unemployment, check withheld my taxes. Withheld my taxes. That is at least, like, if you withheld too much, then you get a refund back at the end.
Right, and you can, as Darlene is saying, elect to have federal income tax withholding on it. And I think we were saying the last time we met probably 10% is a good rule of thumb to just withhold. You may get some of that back, you might not, but it's much better than getting bad news at the end of the year when you file your tax return.
Okay. Next question. I don't think, yes, I got my full stimulus check in 2020. Is there anything you can do at that point?
Yeah, this is a big question this year. And at Cal State Los Angeles, we started preparing returns last weekend on Saturday. And one of the first things we found was that we really need to know how much the taxpayer got in payments, in these stimulus payments, because it has to be reported on the tax return. So there is a way that you can find out how much you got, but you can do it as the taxpayer, but we can't do it as the preparers. So I just put the website up. No, that's actually not the right one. I put the wrong one up. Let me find the other one. Here it is. Yeah, there's an IRS spot where you can go to, and I don't have it in a form that I can copy to the screen, but you can check on your the amount of checks, payments you received during the year, and then we put that on the tax return. And if you didn't receive how much you were due, you'll get the remaining amount as a refund or as a reduction in your tax. So you want to go to irs.gov and then just click on individuals, and you'll see the place to go there. So irs.gov and then click on individuals, and that will get you there.
And a reminder is that when we ask how much did you receive the first stimulus check and how much did you receive the second one. So do give us an exact number. Don't say that I think it's 600, 700, because you will get the letters if you will put in the wrong information in there. Because I have multiple taxpayers who says, oh, I think it's 1,600, and it go out to be 2,400. And then it's when we ask that question, give the exact amount how much we received. And the first I think the first payment was around April 15. If you need to go back to your bank and check around that time, April 15, to see how much you received, then please do so and inform the right amount so that we can recover the right amount back for you.
And the bad thing is, if you just tell us a number because you think it was this amount or you're pretty sure, it's not good, because you're likely to get a notice from the IRS about it. So if you claim you got less than you actually did, the IRS will send a notice to you, and no one likes getting those letters. So we'll avoid that.
Okay. Next question. So I have a Social Security number, but my spouse does not. Do we qualify for stimulus checks?
For the first one, you don't. For the second one, if you have an item, you do qualify for I think the second one was a $600 that you do. But unfortunately, the first one, if you or your spouse does not have the Social Security number, you would not receive the stimulus check on the first one. So you have to be careful. You are entitled to the second one, but not the first one.
Okay, good to know. Okay. Okay. So if you worked remotely from home, can you deduct office expenses? Is this possible?
So there's kind of bad news on this. The 2017 Tax Act eliminated those home office deductions. So if you're an employee receiving a W-2, and as many of us, even I'm working from home as an employee, when that happens, you're no longer allowed to deduct any of the home office expenses. The exception, though, is if you have your own business. So if you're self-employed you run a small business and you're working from home, that you can claim deduction for, and you get, just like you used to, you'll get depreciation and the direct expenses of the home office, the cost of the printer and supplies and office furniture, all those things will be deductible in one way or another. So, but for most people, the answer is unfortunately no, because they get a W-2.
Okay, but what if I work remotely from another state? Like, how does that work?
This one's kind of
Well, that's depending on.
Yeah. Go ahead. I'm sorry.
It's
Go ahead.
tricky, huh? So that
Tricky.
depends on the state, and then yes, and the numbers of days that you worked in for that state, and if it's whether the income you receive was from that state. So tax may be due in that state. So if you, let's say for example in Arizona, if you worked for an Arizona, you receive income from Arizona, then you must report the income that you receive to that state. However, there's a credit between the states that eliminates double tax in two different states. So if you can so if you pay the tax in Arizona, and you can claim the credit, and then you bring it back here to subtract that credit from California, so you don't have to pay twice for the same income.
Oh.
And that's the kind of question that has popped up now due to our remote lifestyle that we have, because people are saying, hey, I'm not going to be going into the office for months and months, so I'm going to go live with my friend in Arizona or Nevada or whatever. And it brings up actually this multi-tax, multi-state filing issue where both states want to get money from you. Of course, Nevada would be a good one to go to because they don't tax individuals.
Oh, yeah.
So go there.
Go to Nevada. We have friends that they live in Arizona now, but they still work for their California companies. So in that case, would they be doubling, or
are they residents of California?
Now they're residents of Arizona because they moved, I think, when did they move? They moved sometime last year. So they're residents of Arizona, but they still work from their California. I mean, they basically just work remotely. I mean, it's the same company. Right.
So those they would not file a multi-state return. They would be employees of the California company that is paying someone that lives in Arizona. So they would have to do Arizona income tax, state income tax withholding on it. The only time that multi-state problem comes up is if you're a California resident, and then because of this shutdown, you decide you're going to go to work in another state, but you're still a California resident. You just are working from another state because your buddy lives there or something. And then you have earned income in the other state, and because you're a California resident, you have earned income in California. And as Darlene was saying, there's tax due on both returns, but you do get a credit to minimize that double tax on the same income.
That's good. Oh, we actually have, let me see. No, I don't think we have any other question. I'm trying to see if I missed a question. Okay, I don't think we have any more questions. So I'm going to be thanking Professor Cooper once again and Darlena for a wonderful presentation and all the great questions. And yes, this is our website. So basically this presentation is going to be on our website, lapl.org/taxes website. And it's also going to be on Facebook and YouTube for several days. So you can also watch the whole thing again. And then also we just wanted to remind everyone that we do have America Saves Week coming up next week, February 22nd to the 26th. It's going to be a week of programs on supporting financial literacy. Some of the programs include your spending saving plan, managing debt, and your savings. And that's going to be in English and Spanish. So it's going to be 2 programs. So please go to check out our website, lapl.org, for more information on that. And thank you once again. I love this presentation. I learned so much. And please go to Vita for your tax services. And I think that's it. Thank you, guys.
Thanks a lot.
Okay.
Thank you.
Bye.